Alright guys, day 21, no, day 20 it should be. Where the fuck does it say 21? Anyways, that doesn't matter. Day 21 or 20, I think day 20 of Unprofitable Diaries. In today's video, I'll be covering my understanding of what a daily bias is. And other than that, I'll also be covering some different like Asia London session. These sessions, like, what do they mean? What can you use it for? Yeah. So the first thing I want to say is please like, subscribe to the channel. If you guys want to support what I'm doing, this is just simply just a series where I cover everything I've learned so far as an unprofitable day trader. I'm not profitable. This is not a course or anything. I'm just trying to become profitable, and I wanted to cover that. I wanted to, show it to YouTube, show it to the world, while I'm still unprofitable, and then so I can look back, and if there's anything in the videos that you watch here that I've missed, that I have misunderstood, please consider comment down below or contact me on social media. That would be highly appreciated. I've got all my links, all my socials down below. If you guys want to join my Discord, please do that. So that'll be down in the description also. Now, daily bias. As you can see here, I've got a split screen. That is because I trade both NQ and the ES, both of them. So I have them correlated here. And what I'll be talking about is this: what is daily bias? Now, my understanding of daily bias is simply that it is your understanding of what way the market wants to go in that day. So it's like, where do we think market wants to go? It does not have to be precise. It will just be an overall understanding. Do we think, are we bullish? Or are we bearish for the day, for example? So let's daily bias. Overall overall is not estimation. Overall thoughts. Nah, you know what? I want to confuse it. Daily bias is just what way you think the market will go in that day. So how can we do this? Now I'll try and explain this as good as I can. What do I do when I look at daily bias? That's probably like what I want to like. I think that's a good way of saying it. So first of all, what we want to look at is the overall trend. So the high time frame, the 1 hour, the 4 hour, and the daily, maybe the weekly. Are we in an uptrend? Are we creating higher highs and higher lows? Or are we creating lower lows and higher lows? That is basically it for, like, are we bullish or are we bearish? Are we in a big uptrend or are we in a big downtrend, I just have to find yeah, what's the structure? I've just got like my checklist here. So I've got a checklist that says what's the structure. So what's the structure on the high time frame? And then you have to identify draws and liquidity. Now, draws and liquidity, what is that? That is highs, lows, fair value gaps, draws on liquidity. Highs, lows, fair value gaps. What can it be more? We've got that. Then we've got session highs and lows. I'll call this high time frame highs and lows, session highs and lows, previous day high and low. Yeah, that's basically like the main ones that I use personally. So do we have any? For example, this is a backtesting day. It's the 1st of March 2024. And as we can see here, are there any fair value gaps near? Are there any fair value gaps close to where we are now? There's actually not. But are there draws and liquidity? Yes, there are. There are multiple, and I will show you guys what I mean by that. First of all, when I go to read the daily bias, the first thing I do is I mark out the Asia session and the London session. Now on TradingView, I've got an indicator that automatically marks it out, but sometimes I do it manually too, because that is good, so I can like keep it out in the brain, so I don't forget it. The first thing we want to do is, I just want to tell you, this is UTC plus 1, so just figure out like what time zone you're in so you can correlate it with it. But in my time zone, I mark it out like the following. I have one at 0000, and then I have one at 9 a.m. and then I have one at 2 p.m. That is it. And then the first one we have is Asia session, and the next one is London session. And then here, over here at 15:30, we have New York session. That is why when New York session comes. So, what can we use Asia and London session for? We can use it as highs and lows. In these strong draws and liquidity, which means that there's a high likelihood for markets to draw to these points. So what we do is we mark the highest and the lowest point of London, and remember, keep in mind that the start of the London session is this line, and the start of Asia is this one. So if this is the highest point, then that is London high. And just for context, you only want to mark out the ones that are not swept. So overall, there's a possibility that we can mark up London low and London high. That's two draws in liquidity, and then Asia high and Asia low. That's 2 draws in liquidity. So in total, we can mark out 4 draws in liquidity. But as we can see, this is the lowest point of Asia, and that has already been swept. So we do not want to mark that. We just want to mark the unswept session highs and lows, and here is the highest point of Asia. So that is Asia high, it is London high, and it is London low. That are very strong draws in liquidity, period. Now, what can we more mark out? Is there anything else we can mark out? I believe this is, I just want to check. Create a new one, right? The fuck? Anyways, so now we can look at, for example, the 1 hour. Are there no other high time frame highs and lows? Then what I mean by that is 1 hour and 4 hour. So, draws and liquidity. High time frame highs and lows. That is 4 hour highs, 4 hour lows, and it is 1 hour highs and 1 hour lows. And as we can see here, we have a 1 hour high, black candlestick, and that is also a strong draw on liquidity. We have another 1 hour high here. Now, normally I do this on both indexes, but I don't want to do it on this one now because I'll just confuse you guys, and it'll probably confuse me too. We also have a 1 hour low right here. So that is checked. We have high time frame highs and lows. Then we have fair value gaps. Are there any fair value gaps? There is a fair value gap here, a 1 hour gap, but it has already been filled. Equilibrium with it, which means it is kind of invalidated, so we can't really use it anymore. What more than that do we have? We have a big fair value gap here, but as you can see, it has also been swept. So we do not want to do that either. So that's basically like the main draws on liquidity that we can find. Then we want to see if we disrespect or we respect this order flow. So for example, if we go down on the 5-minute, market open is over here. So what do we do? Do we respect these levels? Do we continue? Do we change from a 1 hour uptrend to an 1 hour downtrend? Because as we can see, we are clearly bullish on the 4 hour, but the 1 hour has broken structure to the downside, for example. So that is disrespect of the high time frame order flow, because we're bullish here, and here we have broken below, and we have filled a bearish fair value gap, which is an indicator for us to go lower. So could it be a retracement, for example? Because this retracement down could be a 1 hour down move for this to sweep some liquidity, so 4 hour can go higher. That is probably very, very, very bad described to me, so I'll try and just shut the fuck up about that. But once we've done this, once we have all these draws and liquidity, what we want to do is we're going to drop down to the lower time frames, and then we want to see what price does. Now, I haven't set together like how I use my strategy yet, so I won't be showing that. I'll just show you guys my overall understanding. So what you want to do now, what you want to do now is, first of all, you want to check news, then you want to combine the high time frame and the low time frame, and once you're done with that, you want to form your daily bias. That is the 3 things that we have left. Where did it go? Right here. Just keep it out. We'll just create a new one. So we want to check news. We want to combine. Just keep that one actually. Form bias, because we can combine them when forming the bias. Bias. This is also very important, but we'll cover that later. The first thing we want to do is we want to check news. Are there any news events that we have to be aware of? Are they high impact news, etc.? And I do that over here in the back testing, so we can see 1st of March at 16 p.m. my time, we have ISM manufacturing PMI. So we need to be aware of that. We need to make sure we're not in the trade at that point of time. So that is when news comes out. That's good to know, because now I know that. Now I know that I cannot be in a trade before 16, because then my trade might get fucked up because of news. So that's a good thing. So I've checked my news. Check. Then we have form the bias. Now, what do I mean by that? What I mean is you have to find out what levels do we think are going to hit first and where we will go after that. And you have to find both a bullish scenario and a bearish scenario. So for me today, for example, what I do is probably, where the fuck is my, there we go, the path. So, for example, we sweep the lows and maybe we go higher. That could be a possibility. So maybe we go down here, we sweep these lows, maybe we sweep this low too, for us to gather liquidity so we can go higher and then we can enter on this move, for example. That could be a possibility. Another possibility could be for us when market opens right here, that what we want to do is maybe we go here, market open, then we go up here, sweep this high, maybe sweep some of these highs, maybe we create an SMT, which means we will go lower, and then we can enter on this move down to these. So look at all these lines, and if there would have been a fair value gap, also fair value gaps, look at them like magnets, kind of magnets. But there's magnets in each direction, so where do we think we'll hit first, for example? So for me, I'd probably say, all right, the bias today, we have these bullish draws and liquidity. Maybe we'll go down here and sweep, and then we'll go higher, and then I'll try to see if I can enter on this using all my conferences. These inverse fair value gap, order block, breaker block, equilibrium, 79% extension, closure, liquidity sweep, all these different things. SMT divergence, for example. Or do we think, so if we go down here, then I'll try to find buys, and if when market opens here, we go up here somewhere, then I'll try and see if I can sell, if I can find an entry to the downside. That is basically it. You have to form a bullish and a bearish scenario. Because if you say that you're bullish and that's it, but market changes direction and doesn't want to be bullish anymore, and we start to be bearish, and you then think, nah, we're only going to be bullish, then you're either going to lose money or you're going to miss a setup. So don't marry your bias. Be open for changes. Be open to flip your bias. Because my initial bias could be, I think we're going to go down here first and then up here. But if we decide to go up here first, then I'm going to have to flip my bias, because then I'm no longer bullish. Then I'm probably going to be bearish. I do not want to confuse you guys more on that point, to be honest with you. Yeah, not really. I think I'll just stop right there, and we will. Yeah, and I'll just get back to you tomorrow with a new video about my pre-market routine. I just want to show you guys, but that I actually kind of did that today though, so maybe I'll skip that one, because this is my pre-market routine. I mark out these sessions, mark out session highs and session lows that hasn't been swept. I mark out 4-hour and 1-hour highs and lows. I mark out fair value gap, high time frame fair value gaps. I form my bias and look at the high time frame direction. I look at disrespect or respect of the order flow that we are currently in, and then I form a bias off of it. I have two sides. I have a bearish bias scenario and I have a bullish bias scenario, and then watch what happens, and then I react to it. All right. So that's basically it. That is my strategy. That is my daily bias, and that is my pre-market routine. And what I do is I always start 30 minutes before market open. So my time, market opens at 15:30. So I start at 15. That's when I start like drawing out these lines, because then I'm ready, on the different things. Another thing that I also do is that I just, when I've drawn out, when I've like marked out all my session highs and lows, then I just open up CNBC to just check out if there's anything mainly here about Trump or tariffs, and I can also sometimes go to Bloomberg and sometimes Seeking Alpha just to see the headlines if there's anything I have to be aware of, other than what I see in Forex Factory. But yeah, that's gonna be everything for this video. Pre-market routine, I don't think I'll do that one actually. I just think we'll get straight to stop losses, which is going to be a very quick video that I'll just tell you guys what my understanding of stop losses is, and why it's very important to have one. And then take profits is another thing. And then I'll probably do risk management today. I'll just record a couple of videos today because I haven't got time to film them one day at a time. So maybe I'll record 5 videos today, and then I schedule them throughout the week. So that's gonna be it. I'm pretty happy with me trying to explain this. If you guys got confused, go find a mentor or something that can tell you guys this, because I'm just trying to tell you guys my understanding of it. And if I've misunderstood something, please make sure to contact me on social media or comment down below. And if you've got any questions maybe I could help with, please contact me too. Tomorrow's gonna be stop losses. My name is Matthias Albon, and I'm a 16-year-old day trader, and this was Unprofitable Diaries Day 21. I'll see you guys in the next one. Peace out.